Here we have a buying zone study on the Nasdaq futures using a 60-minute time frame. Coming into this chart, first thing we noticed, wide spread closing off the lows in the middle. Huge spread. There is an awful lot of buying. Now don't get me wrong, there is an awful lot of selling, but clear buying. When we have these wide spreads, just think deep about what happens in the mechanics of this bar. So sellers come down and they slam it down hard. Agreed? And they have momentum. But the buyers have to halt all that selling pressure, absorb it, and then push it up. And that requires effort. And that is a significant push, right? We are well off the lows. So it has to halt the downside momentum, then gain energy, and then apply itself to be able to push it back up for a close. So there is a great deal of buying in this bar. However, there is also a great deal of selling. We know that the buyers had the last say because the close is in the middle. And what do we do when we have a wide spread bar closing off the lows? Instantly draw support. So we rally, we come back down, and then we hold here a B. What do we note about this bar? Well, it halts progress. Look at these two wide spread bars closing weak on their lows. We can see that the spread shortens on here and there's a little more buying as we close off the lows. But this bar in comparison has a very small spread. And we only net this much progress to the downsides. Now we don't have volume. It could be, it's a possibility that that bar could be bag holding. Okay, and then we rally. What do we note? Weak price action, very narrow spreads. Then we come back down. And look at this bar here. We close under our support level with an increasing spread, especially compared to all this price action. And we close weak. But the market instantly reverses and then we rally hard. What do we note about this rally? Well, buying emerges in a big way. We have three buying bars. We buy here, then we buy here, and we buy here. And every time buying emerges, the spread increases, which we know that this must be buying of good quality. And sequentially, this is good demand, one bar after another. We can clearly see the presence of buying. Buyers are eager. We can see this from the increase in spreads. Don't get me wrong, we don't buy this bar. Why? Well, because the stop would have to be under the lows. And that is far, far too wide. And we have supply, this wide spread here, directly to the left. Resistance above. So this would be a low odds trade. Even though we can see demand emerge, we need more of a story. Everything is against buying that bar. We do gain data from this action. We have a demand area. We cannot close under. And every time we come here, buying. We come under, instantly reverse with good buying. So for whatever reason, there's buying occurring in this area. So as we round over and start coming down, we want to pay close attention here for a potential trade. Okay, we are on a 60-minute time frame and don't want to miss out on any potential move. So when the support is vague, as it is here, we hold and we have this level, we just simply draw in a demand area where we can see price respected here, here. Every time we touch into this area, we seem to get buying. Fortunately, the market is kind and we get ample opportunity to jump on board. Within here, we have a narrow spread down bar, which is no supply, and we're in a demand area. Perfect. Compared to the other selling bars around, it's very narrow. If this bar with a spread 3 times the size of this can't take it lower, what are the odds of this bar taking it lower? Very low. There is a clear lack of selling. And this is the way we like to think. I mean, when I point this out, I'm sure it becomes very obvious. We give it time, we practice, and deeply understand the why and what's occurring here. And it won't be long before you'll be able to pick up these clean reads. We can dig deeper. And we could compare like the selling here. Look at this drive down here and this drive down here. Then we drive down. Where's the selling? We get a good bar here, but then from here onwards, nothing. Not like here and here. And how does this occur? This selling occurs after demand has proved itself. So we can see that supply is diminishing on every attempt to push lower. And we push down with no supply in an area of demand between 2 support levels. This is a superb trade. It's got everything going for it. And we can also buy this bar here as it dips under to reverse and close firm back above this support after seeing the no supply. This is like a confirmation bar, a key reversal springing type bar. No brainer. So the market is very kind. Don't forget, it's a 60-minute time frame. There are opportunities. The buying zone creates cause. So when price finally rallies and we take off, we should get a decent move. Why? Well, because the cause has been built over 1, 2, 3 days. Now, this doesn't mean that we should rally for 3 days. Okay, but this is a pretty good result. We rally 140 points in 2 days from the break. That's a very good trade for the NQ. Technically, this is a type of accumulation, but not so Wyckoff based with the secondary test and the automatic rallies, etc. And that's a very important concept to understand. And they produce high odds trades when we can read the buying efficiently and effectively. This chart was comprised with no structure and volume with intent, because it gives us an opportunity to solely focus on the important aspects, and that is the buying zone. I just wanted you to recognize that. Before we move on, just think deep about what's occurring here. We've spoken about selling pressure diminishing. We have demand emerge. As we react, we know that we have a buying zone. So we want to pay attention to this area as we come down. As we come down, we note that the selling pressure, there is a lack of selling pressure. We're not coming down like we did before. And when we're in this area and we print this bar, when we compare it to this bar, odds favour this to hold. And we also got shortening on a thrust, and we're holding between 2 levels of support in a demand area. Okay, this is a high odds trade, and this is what we do. We gauge the imbalance between the forces of demand and supply, as we've said previously. And supply pressure is easing here, with demand emerging. And as we revisit with no supply, after demand has proved itself, the imbalance is evident. It's clear as day. I hope you can see this. I hope this is all beginning to click. This is very powerful trading. And we obtain these clean reads by using the simple universal laws and applying a little logic. Good. This completes the buying zones and all our demand-based setups onto distribution.